Good afternoon. This is the SMF Eye on the Economy, along with the NASDAQ 100. Some of the related topics that I'm going to be talking about here will be Tim Geithner, Ben Beranke, some of the hearings that we had on AIG, but more importantly is that we are headed for economic disaster for lots of reasons, but they can be avoided. And let me talk a little bit about that. We've had a major market reversal pattern in play here on the weekly chart. And we have had this great rally in March of 2009 off this bottom. That's way down here, 1200. And we've gone all the way up to that January top. And basically, we are closing below the 200-week moving average, the 20-week, and the 10-week. Now, in specific relation to the economic potential disaster and economic uncertainty, and as far as Wall Street is concerned, we had the Obamonomics in there, where we are going to attack our banking system, which is the wrong thing to be doing. But let's talk a little bit of specific about some politics here, along with the stock market. And how do politics and the stock market work together? People are very uncertain. Investors, people in Congress would like to see Timothy Geithner go. If he left and was out of that position, you know, as he was grilled on the AIG hearings this last week, is that the market would probably rally. Ben Beranke, his biggest dilemma is going to be, when will he start raising rates before inflation starts to hit us in June of 2010? These are the highlights. This is why we're having this amount of selling, and not just the NASDAQ comp. All of them. All of them. I could show you the Dow, which I've already done. Big reversal in the Dow this last 3 weeks. Big reversal in the these are big selling days here at the top. There's the NASDAQ 100 and the S&P 500. And the market is forward looking. And basically, the reason why, these are all support and resistance lines. I'll take them out of here for you. Hey, this was the top. The market could rally again at a later date, as we work the overbought process off. But what investors and people are going to be looking for is, how do we get a new beginning? The earnings season was very good so far, and we've only been a couple of weeks into it. So companies have leveraged their business models and things like that. The biggest problem that we have for economic disaster is raising taxes. What's going to happen to the Bush tax cuts as we move forward? And the market looks 6, 9, 12 months forward. And that means that this whole rally is at jeopardy. We're not going to go straight down. We just didn't go straight up. But over a period of time, we did, because things were different. So the uncertainty in the market is, number one, is inflation going to be down the road? Does the new or the second term Ben Beranke, does he have the skill to take the short-term, ridiculous low money rate and higher rates to fight off inflation before inflation gets here? I have not seen one Fed governor in U.S. history that knew the right time to do it. So there are a lot of things that are weighing on these markets. And Geithner, the public is not happy with Mr. Geithner and his activities before he was appointed. And when he was appointed by Mr. Obama, people felt that he shouldn't have been there to start with. They did not like that appointment. So the stock market could rally severely if Geithner was removed. Who would replace him? I can't even tell you. But just the fact that he was removed would change sentiment. The market would get back to focusing on its earnings. It would focus on the cycle that we're currently in. And if there Mr. Beranke started to raise rates, okay, these are the things that the market will want to see. If the market doesn't see any significant changes, then we are potentially going to come back here on the Dow. This is the first, or that's 87.45. We do have major support levels, as I said before, at 95.40. The problem with everything is that the banking system did a great job because they got the TARP fund. They got money at 0% rate, and then they loaned it out to people like us. And they turned it around, and they paid it back. And Mr. Obama came back and said, well, guess what? We're going to tax you. Well, that's another problem. So the market's got a lot of different concerns looking forward. And if they're not resolved, and the deficit going higher, and there's another 1.9 trillion on the table that people are talking about, it's quite a mess in that regard. I'm not going to be able to go into it all on the tape. I can tell you that you can join us at www.stockmarketpundit.com or call us today at 702-685-0772. We would be happy to spend time with you. We would be happy for you to attend our 5-day online trading event. It can be, you can attend from your home, from your office, from your vacation spot. Doesn't matter where you're at in the world. You can still log on, and we would be happy to have you here. If there's a way that we can help you, is we want to help you. We don't want to see your assets go down. And I would recommend that the amount of selling that we're having here on all key 4 indexes, stock prices, the leadership, stocks like Apple, stocks like Google, stocks like Amazon that couldn't hold their earnings, stocks like IBM, in those sectors there. Some of the semiconductor components, some of the financials, some of the other various areas. Retail is subject to have a very severe problem moving forward. There are lots of different sectors and indices that are at risk when the economic uncertainty and fear start to climb. People start to sell and ask questions later. And why would they sell? Because people have a chance to keep stop market orders in up here. Now, the public is going to need some guidance. And the guidance that I could give today is that you would sell and ask questions later. Because when all 4 key indexes are going down, and these are major weekly market reversals in play, we need to have some kind of resolution, the stock market does, because it's going to be forward looking. People, fund managers, mutual fund managers, and everyone that was lucky to get in down here, most people didn't because they let most of the move go by. They're going to protect this money, that or those profits that they made. And it's the economic uncertainty or disaster that is forward looking as we move through 2010 that has a big concern here. There are various different categories, but they're categories that create emotional fear, emotional uncertainty, and there needs to be some changes. So we could really rally if Tim Geithner in the Treasury Department left. Sheila Blair over there at the FDIC been bailing out, lots of banks and whatnot. I don't really have a complaint with her. I can tell people, though, that there has been a lot of confusion in these markets. And my saying is, we can teach you how to make money when markets fall, and you can make money. We can teach you how to protect your portfolio by using risk management tools for the downside so that you don't get hurt and you don't have disaster. Remember, what happened in 2008 can very well easily happen again. If there's not resolution to what caused the problem, and let us not forget about the poor consumer, people like me and you, is that the consumer is extremely fearful, and the consumer is extremely uncertain. They don't know if they're going to have their job next week. They don't know if they can pay their mortgage next month, because they don't. And what funds that they have, they're trying to protect. And unfortunately, in my view, the consumer is the one who is the victim here. Retirement people that have IRAs, you got a great gain back here off of that 2009 move. The market was forgiving for once.